to all of you. So today we're going to begin with what we've done already, the line by line breakdown of the income statement. And tomorrow we'll do cash flow statement. Then the next day we'll do the balance sheet. All of these for MTN for now. All this for MTN. So with all of this, you can relate to the other statements or the other institutions you want to analyze. So let me put it on full screen so that we all see. Now, this is the Q1 report for MTN Ghana. We've picked the line by line breakdown of the items within the statement. So from the top line, which is called the revenue, to the bottom line, which is the net revenue. For these kind of topics, it's important that you don't assume that you know everything. And I must promise you that the more you study these things, the more you know. The more you put your hands to it to work with it, the more you become familiar with it. So don't think that, oh, you've tackled this topic already, so I know. No. If you study it and you don't practice it, you forget. Now, let's look at why we read the income statement. The income statement tells you whether the business is making money or not. It is the first story in the financial analysis reads. So revenue is the top line. So it refers to the money that comes in, how much customers are paying for the services of this company, MTN. So if there's a growing revenue, it means the business is expanding. Revenue is a top line. You can pick any income statement and check the very first item at the top. It is the revenue. Now, moving on to the costs. The costs. So in some statement, you find administrative expenses. Sometimes they are breakdowns. So for MTN, we have what we call the costs. We're going through the breakdowns of all of them. So how much it costs to deliver these services. So when there's falling costs and there is profitability, it shows improving efficiency. When there's falling costs and there is profitability, it shows that you are using or you are expensing small amounts to get very good revenue and profits. And it shows improving efficiency. EBITDA shows cash the business actually generates from before depreciation and taxes. This is the true operating engine. EBITDA is the cash the business actually generates before depreciation and taxes. So it's earnings before interest, tax, depreciation, and amortization. And profits is what is left to shareholders after everything has been paid. What is left to shareholders? We'll go down into all of them line by line so that we will understand. Now, with the MTN, this is the full picture. Now, the total revenue here, as you can see, 7.2 billion. Forget we've put naira there. It is a typo. Okay, it's a typo. 7.2 billion. We quote the Ghana cedis. That is our currency. So forgive me for the quote there. So total revenue 7.2 billion. All right, as I've explained, every cedi that is collected from customers. So right after the total revenue, you have the operating costs. Operating costs. So it comes in network, the staff, customer service, interconnects, device subsidies, every cost that is used to generate the revenue. Okay, then down below it is the EBITDA. That comes to 4.4 billion or 4.5 billion. That's the cash generated by operations before depreciation and taxes. So as you can see, revenue, the money that comes in, the costs that is involved in generating the revenue. Okay, then you come to what is left. What is left, then the other accounting processes will come in. So there is depreciation and amortization, which is not cash. There is then you come to the operating profit. All right. So as you saw in the free cash flow calculation, we add back depreciation and amortization. Depreciation and amortization. Now we come down to interest finance costs. Finance costs is the interest that we pay on loans. Sometimes companies say it doesn't matter the interest I pay on the loans. If I'm profitable, I'm profitable. I can run the business even after paying the interest. So interest too is deducted. Then we come to the profit before tax, 2.7 billion. Before you pay your taxes and they come to your net profit. So this is a line operational procedure when it comes to the income statement. When it comes to the income statement. So revenue, operating costs, then you come to the cash that is actually normally analyzed. Then you can add back or take out. No, this is not the free cash flow calculation. So you take out depreciation and amortization, and you take out the finance costs, and then the taxes. You come to 2 billion Ghana cedis. Now you will pick the items one by one to go through it. So the top line, that is the revenue. That is the revenue. This is the components of the revenue. So we have data revenue, we have the voice revenue, we have the mobile money revenue, digital service, and others. So the key insight is that data is 59%, or it forms 59% of the entire revenue of MTN for the Q1 2026. Okay, so as you can see there, it's 59%. These are the components: internet, broadband, mobile data, subscription, etc. And the voice revenue, traditional phone calls that we make, mobile money, we all know mobile money, and digital services, gaming, streaming, content, and so on. So from all of this, we saw that mobile money fintech limited has been separated from MTN. So what it means is that these are the rest of the services for Scancom Ghana will be voice revenue, data revenue, digital services, and others. And once mobile money separates, the question is, will Scancom PLC will it still be resilient? Will it still be strong? I think it will be. From what we have seen, data is an area that MTN is also going into, and they want to really grow it. So for it to form 59%, the whole perception is that Momo is the main driver of MTN Ghana. This information here shows that it's not the case. This information here shows it's not the case. So the rest of the services put together, they are more, or they form more parts of the revenue stream than mobile money Ghana. Now the operating costs, these are the breakdown. Inside the operating costs, we have network and infrastructure, we have staff costs, interconnects, fees, device subsidies, customer service, and support. These are the components of the operating cost. And the operating cost is equal to 22.8 billion. Let's go to 39% of the revenue. 39% of the revenue. So all the revenue that MTN generates, 39% of it goes into cost. 39% goes into costs, which is very efficient. Now the EBITDA here is the revenue minus the operating costs. Revenue minus operating costs. So it's the cash the business actually generates from operation. It ignores depreciation and finance decisions. The EBITDA margin is 1.2. For every 1 Ghana cedi, MTN keeps 0.61 as operating costs. And we've all seen that EBITDA at 61.2 is a very strong indication of the strength of MTN Ghana. Now we'll move to depreciation, amortization, and operating costs. So D&A for MTN owns thousands of base station towers, each has 15 to 30 year lifespan, and the depreciation spreads the cost over time. And we have fiber and cables, we have equipment and technology, why non-cash, and the insight. So DNA 948.6 million. Operating profits is equal to the same as the EBITDA minus DNA. That is 4.4 billion minus the DNA, that is 948 million. So it comes to 3.5 billion. So this is the breakdown. DNA towers depreciation, the items that attract depreciation and amortization. So fiber and cables, equipment, all the assets, the capital asset that the company invests in. Now we move to the finance costs. That is the debt burden of the business. Finance costs, the interest that the company pays. So that is 753 million. So what is the finance cost? Interest paid on outstanding debt. MTN borrowed to build network. Banks charge interests on the borrowing. So that's the percentage of the interest, and it's 10.4% of the revenue. Forms 10.4% of the revenue. Why it matters, high finance costs can eat into profits. If you borrow too much, okay, interest crashes net profit, even if operations are strong. So interest coverage ratio, EBIT divided by interest. That is the formula, interest coverage ratio. So what we can see is that the rate is 4.65 times. So MTN earns 4 CD 65 pesos in EBIT for every 1 Ghana cedi of interest. Now we're looking at debt versus equity. MTN could have funded growth through equity, that is issuing more shares instead of debt. But debt is cheaper, and I've explained that for MTN as a very big company, debt has been the way to go because it's a company that every bank can be comfortable with. So therefore, it can actually negotiate for lower interest rates. Now we'll move on to the corporate income tax component. So corporate income tax rate in Ghana is around 25%, and the MTN for that period pay 24.5. So taxable income is at 2.8 billion. Sorry, 2.8 billion. The tax amount is 671 million. Okay, so that is the tax component for MTN Ghana. Now we move straight to the bottom line. That is the final component of the income statement. So profit after tax. The profit before tax minus tax. That is 2.7 minus the tax amount. So you come up to 2 billion Ghana cedis. 2 billion Ghana cedis. So as we can see, for every 1 Ghana cedi MTN collect, it keeps 0.29 as profits. So that is 29% of revenue. 29% of revenue. Earnings per share is the net profit divided by the outstanding shares. So each share earned this month in Q1 0.187 earnings per share. And the dividend, as we saw, 0.06, 0.03 paid by Scancom PLC, 0.03 paid by MTN Fintech Limited. And this is going to be the new way of doing things for MTN. Retained earnings 1.9 billion, and we are seeing reinvested in the operations of the business, debt paid down, held as cash reserves. All right. So this is the net profit. Now we will look at some of the metrics that we use in the income statement analysis. Now we can see the gross margin, that is revenue minus operating expenses divided by revenue. So gross margin, and it looks within the range, just 1.2%. So the standard industry rates between 50 to 65%. Then we have operating margin, net profit margin, return on revenue, how much they are getting on revenue, interest coverage, how much MTN spends on the interest payment and the tax burden. So this is a summary of the income statement. I think this is the end of the presentation. If you have any questions, you can ask. Tomorrow we'll move straight to the cash flow statement. And Wednesday we'll look at the balance sheet. So any questions on this presentation?